What's up, my crypto legends? In this episode, we are going to go through a trading strategy, okay, on the 1 hourly chart, and I'm going to show you just by using support and resistance breakouts and the Fibonacci tool, you can have a 70 to 80% winning rate with this trading strategy. So make sure to stay tuned. Hello there, Andy here. Welcome back to another episode of Bitcoinsensus YouTube channel. Make sure to subscribe daily to on Bitcoin crypto, also to live streams to connect with the community, not financial advisor, so don't buy or sell anything that I say, guys. For today, for this strategy, we are going to use the Ethereum US dollar pair. We're going to take a look at the last 3 months, okay? We're going to take a look at December, October, and September for this trading strategy. We'll be basically using the 1 hourly or the 4 hourly time frame. It doesn't really matter, but what I want to show you here, that this trading strategy is really profitable. It's got even a 70 to 80% winning rate, all right? And I'm going to demonstrate you in this episode. So basically, this could be a day trade or a swing trade, because one trade can last for 1 day or it even can last for 3-4 days, right? So it's not a day trade, it's not a swing trade, it is a bit of a mix of them. The trade can last 1 day or it can last 3-4 days until you reach your target. So let me just explain to you, there are 3 basic rules, okay, here for the Ethereum pair. And this is going from September. We're going to start with September because it's enough, guys. We're just going to take a look at the last 3 months. I'm not going to take a look at the last year. But basically, there's 3 rules here I've been taking a look at. And we want at least a 5% move from a breakout of a resistance and a support. And I'm going to go through the resistance and support levels right away, guys. But we want to see at least a 5% move. And I'm going to explain right away. Also, your take profit at 60% of the move, right? Let me just put this correctly because I didn't put this. 60% of the move, then you start taking profits. I'm going to explain this also with the strategy, and your stop loss needs to be below 78% of the start of the impulse, right? So when you make a massive impulse and you correct, you want your stop loss below 78% of the Fibonacci retracement. Now, there's only 2 tools that I am going to use here. Let me just put this slightly here up, and we're going to zoom in straight away. Okay, I've got already my support and resistance levels, but you can detect them. We can take them off and you can detect them by your own. It's pretty simple because you just need to see the high and the low, basically. And you need to detect the trends, all right? So in the case here of Ethereum, if I zoom in, right, let's go all the way back from this massive top that we had here in December, early December, right? And this is when we were starting to change the trend here to the downside. And I'm going to show you here how we can detect the trend reversal also. Now, we had a massive drop here with very high movement and high volume. Now, once you retrace here, for example, you know, this could be the first trade, but I don't want you to trade this just yet until you actually break a support level. Where you see this price, where it stops, it is right over here. In the case of Ethereum, it's at $3,140. You can clearly see a major support level right over there. And once you see a breakout of this major support, you want to trade the support turning into resistance right over here, right? So that would be one short opportunity. You've broken this level, you come back up and retest it, you enter a trade, and your target is going to be at least 60% of the actual movement that's been made from the breakout of the support level, right? So if I take a look here from the lowest part, how do I know I'm going to reach 60%? Well, if I take a look at the low part, all the way up here to the resistance zone, this is where I started to short. And if I take a look at the fib levels from the low all the way to the high, then we know that 60% is, you know, the golden pocket ratio, 61% is right over here. So this is when you would start to take some profits, right? You're aiming at least to 60%, 70%, and this is when you're starting to take profits. As you can see, in this case, we did not reach the low here to retest it. So you're already taking profits at round about 60%. You could protect your position and look for 70, 80% here for taking profits. So that would be one trade right over here, straight after breaking the resistance. Now, when you want to detect a trend reversal, when you are actually breaking the trend line from low highs or from higher lows, if you are going to go to the downside. In this case, you are looking for that trend reversal to the upside. So we've got two higher lows, lower highs, sorry, here. You put a trend line right there, and you can see as soon as you break it, you are changing the trend in this case because you've had a massive impulse. Now, in this case, like I showed you, we need to take a look at the rules that we got here. So it's a 5% breakout move. In this case, did we have a 5% breakout move? I'm going to take a look here from the highs to the lows. It was, it was basically a 12% breakout move. So it was over 5%. So that is good for trading already, as you can see. So you've got one trade over here. You've got one winning trade. So let's put here in the green, one winning trade, and we can put it in the green. So we know that that is one winning trade right over here, right? So put a number one right there. Now, as soon as you start breaking here, you would potentially be waiting for a major trade here because you have broken here the resistance, but the price action did not come back down and retest it. So that is one trade that you miss out. You do not trade on this. And as you can see right over here, as soon as you break this trend line, you create a nice resistance zone where you have been consolidating here for a few hours. Now you have a retracement, and the only thing you need to do here is wait for the actual breakout. You break out from this resistance point, and guess what? You come back down and retest it, and this is when you enter a trade. Now, taking a look at the Fibonacci retracement, let's take a look at one of the rules here that I've got. Now, you want to put your stop loss below 78% of the actual impulse. And you might think to yourself, where does this impulse start? Well, looking at here at the chart, you can see that the impulse starts from this lower part right over here. As you can see, in the case of Ethereum, it's at $3,400. From the breakout here, you reach up to this level. So you're taking your fib levels from this low to this high, and you are taking the fib levels right over here. So you're basically entering the trade. Let me just zoom in here a little bit. You are entering the trade here at the resistance, turning it into support, and your stop loss goes below the 78% Fibonacci retracement right over here, round about this level. You could tighten it up at the 78%, just because a lot of the times the retracements does hit 61% golden pocket ratio. Even though you have a major support, you might have a little bit of volatility, and you want to be protected with your stop loss. And if the stop loss is hit, well, then of course you're never going to find a 100% winning rate on a trading strategy, right? So basically, you enter here at the resistance, turning into support. Where do you exit? You exit at least at 60%, all right, of the move. And how do I know 60%? Like I showed you, you take the Fibonacci retracement from the top all the way to the bottom, and at 60%, you already take profit. So you'd be taking profit right over here already, okay? And if you want to protect your position, you could wait for 70, 80%, and then you close your position entirely. So what happens afterwards? You wait for another breakout. We got another winning trade right over here. Remember, you only trade when you come back and retest the support. You might think, okay, you did not trade this resistance because you didn't come down and retested it. So that is not a trade that you do not take. So basically, let's take a look at this one. This was also a winning trade right over here. So we got number 2 winning trade right there. Okay, and then which is our next trade? Our next trade is the breakout of the resistance, guys. Remember, this is Ethereum back, in October. We're looking at October right now, and basically here we've broken out from this resistance. In the case of Ethereum, it's 3,950. You break out. What happened here? You come back down. We retested the resistance, turning it into support. What are our rules? Was it a 5% move from the breakout to the top? Yes, it was a 10% move right there. So we take a look at the Fibonacci retracement all the way to the top. We place our stop loss below 78% right over here, and we enter the resistance, turning it into support right there. Where do we exit? At 68% of the move. We take a look at the top to the bottom right there, and we exit at least 60%. In this case, it would be just right over here, as you can see. Okay, this one did not reach all the way to the top here. It did afterwards, but it came back down, so you might have held your position, quite a long time, but you can exit at 60, 70%, as you can see here, of the actual pump. Then you retest the highs, as you can see. So this is up to you guys. I'm just telling you the strategy, because sometimes you do turn around. It's just to lock in profits, guys. You need to learn how to lock profits, and you lock profits at plus 60%. You just lock it, and that's it. So that is another winning trade right over there. So we put here number 3 winning trade right there. Third trade that we made from a breakout of a resistance or a support, turning it into support or resistance. There we go, another trade right there. Remember, for experienced traders, down below you got the best bonus available on Bybit or on Femex, up to $4,100 worth of bonus. I've also got a tutorial down below in the description to use this platform. Next trade, let's do it. Let's make it. We got a resistance zone right there. We didn't really basically break this resistance because we didn't have a 5% breakout right over here, right? Okay, guys, you might think, yes, we've broken resistance here. Why didn't you trade that? This was not even a 3% move. This was from this top to the high, yeah, about a 2% move. So yeah, that is not tradable. We want to trade the next clear breakout. So we got a clear resistance zone right over there, and we got this next breakout. What was this breakout from the top here of the resistance zone? If we take a look from the bottom to the top, it was over percent. It was 6.5%, as you can see, from this support range all the way to the top. When do we trade? When do we get in? We're getting at the bounce of the resistance, turning into support right there. So you could have entered already around this level. As you can see, you might have been possibly slightly in the negative, but this was also winning trade. It was over a 5% pump. The swing starts from this low, as you can see. So we take from the low to the highs right over there. Where do I place my stop loss? Below the 78%. This is the purple line right over here. Stop loss just right over here. So this, you could have been in negative for quite a little bit, but then you come straight back up to your profit area, which is 60% from the lows here. As you can see, as soon as you start hitting 60% here from this bounce, you take your profits. Now, basically, you would have thought here, right, let's take a look at this high. Let's put a trend line. And you do actually break the highs here, okay? You do break the highs. Was this a 5% move? It was probably slightly a 5% move. No, it wasn't. It was 3.3% move. So we do not trade this already. This move wasn't enough. This was a potential fake out. It's not enough, but this was actually a winning trade also, but it wasn't a 5% move. So I wouldn't have traded this, even though it was a winning trade, because we did bounce nicely at the resistance and came back up, as you can see, to retest the highs. So this one is not traded. It would have been successful, but we need to stick with our rules and regulations, as you can see here. Now, what do we have right over here? We do have a breakdown. We are changing the trend. So we need to detect the trend when it's broken, and we are when we are going to the other side. So we have a massive uptrend here. If you do connect the higher lows right there, you can start seeing here that you are changing the trend. So now we are looking for short positions. So far, so good. Hang on a second. We forgot about this one. This one was a fourth winning trade right there. Fourth winning trade right over here. This one, this bounce right over here. Now, we did not trade this one because it wasn't a 5% breakout from the highs. No trade done here. Now, zooming in here on the chart on Ethereum, we're finally breaking this major support level, this resistance. It's a support, but there's just a lot of volatility. We actually did have a 5% drop here. This was a very, very volatile though. You could have traded, this was... No, it wasn't yet a 5% drop. So as you can see here, we didn't have a 5% drop from this resistance zone, right? This wick over here didn't manage to make a 5% drop. Now, you could have possibly got stopped out from this level, because if you take a look at the highs to the lows, yeah, basically your stop loss is below 78% right there. You would have got stopped out slightly here because you would have entered a short maybe here. This wasn't possible. So let's just say, for the sake of it, I wouldn't have traded this because this is not reaching 5%, almost 5%, 4.5% of a move. So we said it's 5% of a move, guys. That's one of our rules, and this didn't make a 5%, but just because we have 4 winning trades, let's just make the, for the sake of it, if you would have entered, that would have been your first losing trade right over there. You would have got stopped out on that trade position right over here. Just to keep it simple, guys, I got stopped out there, one losing trade. Now, what we want to take a look at right now, you slightly, is this low over here. You have created a low. You have a lot of volatility, so you have created a low right there with this wick, and this low is exactly where this high is, right? We got a high right here, and you got a first low over here, right? So that is already a major level. This is why I extended this green box. So you got a green box from the highs here, and also the highs and the lows. So you've got this low over here, right? If you understand, I've extended this box over here. So you want to start trading as soon as you break this low over here, right? You got a low right there. What has happened? You are changing the trend as I showed you. Now we are looking for short positions. We've broken this higher low trend line. We are looking for short positions. If I zoom in here on the chart, I want to show you right here, when we start breaking this low, we come back up and retest this resistance zone, this support level, turning it into resistance, right? You could have traded this one or this one. It doesn't really matter. You could have entered that or this one. It doesn't really matter. We didn't really reach it here, but you reached it right over there. So, I mean, taking a look at this, at the Fibonacci from the highs to the lows, where do you place your stop loss? Your stop loss is behind the 38% levels. Was it over a 5% move from this support level, from the support to the lows? Yes, it was about a 10% move, right? So yes, we've gone all the way down here. What above 5% move? You enter here. I don't mind. You can enter here or you can enter here. It doesn't matter. If you missed out on this one, then the second one could have been another entry. At this resistance, at this support turning into resistance. So you enter there, your stop loss is here, stop loss wasn't hit here or here, you got a 5% move. Where do you take your profits? Your profits are taken from the 60% move. So you could take the lows here to the highs. All right, in this case, if you would have traded this one, you already take profits right over there at over 60% levels, okay, between 60 and 70. And if you would have traded this one, you take your lows to the highs, and okay, when you enter this position right at these levels, stop loss wasn't hit, you come back down, you take profits already at this level, right? If that you understand. These are the rules in this case, in the case of Ethereum on the 1-4 hourly chart. These are the rules that you need to stick together with. So basically, we're going to count this as one trade, right? Another successful trade. Number 5 trade was successful right over here. So another successful trade. It doesn't matter, this one or this one, they were both good trades. Now here's where it gets a little bit interesting, guys, because remember when we broke here, the trend here to the upside, right, to the downside, sorry, this uptrend, we are changing the trend to the downside. So we're looking for short positions. Remember, we changed the trend. We're looking for the positions on that same trend direction. So we're looking for short positions. We're looking for longs here, as you can see. Now we are looking for shorts. So this breakout from this resistance, we do not want to try and long this because we are looking for short, guys. Remember, so that we do not take any trade here because we are looking for short positions. But this is also a very, very good example here, just to take a look at that this major level is a strong resistance, right? It's a strong resistance and it has been turning to a strong support. So because we are looking for short positions, if we do a nice consolidation at a range, we do have a very good support level that needs to be broken, that will be taken as resistance in this case. Then once we break it here successfully, we know that this level is going to be a good shorting opportunity. Now, in this case, we did see a massive fall here on Ethereum. This was on the 4th of December when Bitcoin and a lot of the altcoins were getting absolutely crushed, a lot of volatility. So you might think to yourself, Andy, we did break this support level So in this case, yes, if you would have put a short position here, you probably would have got stopped out. Now, probably not, guys. It would have been a little bit of an aggressive trade because remember what I say, you do get the, when the impulse is too high, remember, guys, you do take a look, you do take the Fibonacci retracement from the top to the bottom of an impulse, right? We've got this one right over here. For example, we had this one right over here. And, if it's too large, then basically, it's very, very difficult. In this case, for this one, you would have entered a trade at this major support level turning into resistance, right? Because we did break down and your stop loss is a little bit too far away, guys. You are risking too much. If the impulse is too big, just let it go. Let that trade go because it's too much. You are basically risking all of this for a potential trade that's you're risking more than you're willing to win in this case. So if the impulse is over 20%, over 15%, then you do not want to take the trade. Also in this case, from here to down here, it's a 27% move. So yeah, we do not want to trade that because if not, your stop loss is going to be very, very hard. So in the case here for this one, I would say a move in between 5 and 15%, right? Because we do not want to have such a big of a movement, right? Like I said, 27% move here. If you are trading the bounce of the resistance, then yeah, you wouldn't have got stopped out, but it would have been a crazy ride. It would have been a negative for a long time. And yeah, basically we do not want to take these trades. So you are basically trading the resistance. You're looking for that potential profit, but your stop loss is all the way up here behind the 78% retracement of the drop, right? If that makes any sense. So you're basically going to be in the negative for a long time until you actually, by luck, you are getting profits because this could have turned around. So you do not take that short position right over here, but you do take this one because it's a breakdown again of a major level, a major resistance support level, right? A support level that's turning into resistance, if that makes sense. Now, basically, you do take the impulse right over there, and this was an excellent trade from the highs, Fibonacci levels to the lows, and you enter basically just very, very near to your stop loss. So that was excellent. You do have this major level. As you can see, this is where you currently could have entered your trade from this resistance zone after the major breakout and the retracement. So you enter a trade at this range and your stop loss is behind the 78% level. This was an absolutely incredible winning trade right over there. So where do you take profits? From the low part to the highs, wrong tool, from the low part to the highs, you're looking for the 60% move right there. Basically, right over here, you could already take profits. You just wicked and touched that 60% levels. You did finally come back down. So you know the deal. We need to go with our rules. 60% of the move, you already take profits. So you take profits already over here from your short position. So you already got a winning trade. Now, guys, remember, let me take a look here. Just put that number 6 trade, winning trade right over here. And you might think, yeah, this is easy as soon as the price action is already done and you draw on the charts. So guys, but this is why you need to practice this. You need to practice this for a couple of months even and back test it. Write your winning trades, write your losing trades. And once it works for you, you can use it, guys, to win money. So I'm just showing you this potential target. And a lot of people might think, yeah, this is easy once the chart is done. This is one of my most successful trading strategies. Most easy, simple. You don't even need volume. You don't even need anything. No indicators. Just support, resistance, and Fibonacci. So basically, and you might think, why didn't you long this breakout of the resistance, guys? Because we've broken the trend and we're looking for short positions. All right. A lot of people get mixed up with all of this kind of sentiment. You need to practice this strategy. Now, what are we looking for here? Now, in the case of this massive volatility, you could arguably discuss that this is the low, but because we had a massive drop and we maybe not going to even hit those levels, we are maybe going to reverse from here. Remember, we are looking to potentially change the trend at some point. And when you're going to change the trend is when you break here from the next lower high. In this case, it would be this one. You would start changing the trend as soon as you break this lower high, right? So you're not changing the trend anytime soon by the looks of things. So you could arguably discuss here that you could actually short the breakout from this major level. So you did not break out from here, no 5% moves. You want to see a 5% move from the low part here of this major level, right? So this is just volatility right there. This one was already a 5% breakout. As you can see, we hit about 8%, which is perfect for a trade. We do not, there's a lot of noise in the chart, guys. This is why it's very, very difficult. A lot of noise in the chart. Only when you have a nice 5% breakout, then you actually trade it. So we are looking for our next potential short opportunity because we're still in a downtrend. And like I said, this one finally had the 5% drop there. So if we take a look at the retracement, the drop starts from this potential retracement. As you can see, this is all an entire drop. So you would take a look at the fib levels here to place your stop loss from the highs to the lows right there. You would have a stop loss here behind the 78% levels right over here. You enter a trade here just so you're cautious because of the volatility. So you enter a trade right there at the resistance and you short it and you take profits at from the low part to the highs. You start taking profits here at 60% of the move, just above 60, 70, in between 60 and 70%, you take profits already, guys. So that was another strategy there, another trade that was a winning trade. Right, guys, this video is getting really, really long and I wanted to keep it pretty short. So just to give you some examples of this potential trading opportunity, as you can see, we do have another level right there. It hasn't been broken. So this is currently right now live. Now, I would only trade this. I wouldn't trade this breakout of the support. It looks like that the price is getting a little bit exhausted. You could potentially, it wouldn't be a 5% drop actually. Let me just take a look. Would it be a 5? Yeah, just very, very tight 5% drop. And remember, we have got the lows here, so it might be just a retest of the lows and come back up. It's not even a 5% drop. Now we are potentially looking for a trend reversal. If we do break out here from these levels currently and break out here the trend line and break here the highs, in this case it would be 4,100. So if you do make from the $4,100, you make a 5% pump. This would be all the way up to 4,300, at least a 5% pump. So it would be 5, 7, 8%. You would trade, okay, you would trade the drop here, the correction right over here. As you can see from this level, you would trade the bounce from this major resistance turning into support with that strategy that I've explained to you. We do not short this because it's not a 5% drop and we've got this low over here, so it might be just a retest for a potential reversal, guys. Now this is what I got for this episode, guys. As you can see, we did have 8 trades. We had only 1 losing trade at the top here just when we were changing the trend. Remember, we're just looking for shorts, we're looking for longs. When you break trends, we're looking for shorts. When you break this trend, we are looking for longs, guys. Thank you very much. Make sure to smash up that like button. Check out Bitcoinsensus website for the latest news and technical analysis. The links are down below. Thank you, guys, and I will see you in the next one.